Hi there, so welcome to the masterclass for the ICA examination on public sector accounting and finance. Now in this very first video, I want to give you the overview of the syllabus, what is entailed in the syllabus, what is contained in the syllabus, the various areas that we have to focus on, the various areas that we have to look out for in relation to how we have to position ourselves in learning the subjects. Now if you look at the syllabus, the entire syllabus is divided into 8 various segments and adding up with a syllable grade of 100%. So I'm going to go through each of the sessions of the syllabus and find out and look at the various things that you need to understand, the various things that you need to look out for when it comes to public sector accounting and finance. So if you look at the syllabus, the first aspect of the syllabus, let me just fix this thing real quick for my sound. The first thing you need to understand is section A, and section A of the syllabus, that is about the public sector financial reporting in Ghana. Public sector financial reporting in Ghana. Now, by the syllabus grading, this is 15% of the syllabus. It means that actually the highest syllabus grading is E, that is preparation of financial statements. So 15% is substantially a great area that we have to look out for. But the big question we need to ask ourselves is, what is entailed in this session of the syllabus? Public sector financial reporting in Ghana. What does it entail? Among other things, this is where we're going to be looking at various topics such as budgeting in the public sector. So we're going to go through the various stages or processes of budgeting, like budget formation, budget authorization, budget approval, budget execution and reporting, and then monitoring and evaluation. So anything about government budgeting in the central government, in the local authority, in the local government, we're going to be discussing it at this level in relation to that. Then we will also consider the formats and then the structure and content of public sector budgets. What does the budget contain? I know by now you should know what the budget of the central government contains, or what the budget of a metropolitan municipal district assembly may contain, or even a ministry, a department, or an agency may contain. But most importantly, what you need to understand is about the various things. So we're going to be going through some pro forma budget content that you need to understand. We know definitely we're going to be looking at revenues, we're going to be looking at expenditures, we're going to be looking at the various items under those things in relation to helping the government to prepare the budget. Also, we will be considering the issue about supplementary budget, the reasons why we will have a supplementary budget, financing of budget deficits, and all of those things are some of the things we're going to be considering. So it looks quite a bulky area. We're going to be looking at the methods of budgeting, incremental-based budgeting, zero-based budgeting, program-based budgeting, activity-based budgeting, and all of those methods of budgeting, their advantages, their disadvantages. We're going to be discussing all of those things in relation to budgets here, in that case, in the public sector, in relation to that. Now, one thing you need to understand when it comes to public sector budgeting, and we'll get into this later on, is the difference between planning and then budgeting. All right, planning and budgeting. You've got to find a relationship between planning and budgeting. So, for instance, the government may have a national development plan for say 40 years, so that in the next 40 years we want to achieve A, B, and C. So, how that is a plan. But that plan must be executed every year. So the way the plan is executed every year is through the preparation of what? Budget. So more or less, budgeting is the implementation of the plan that the government or the nation has put together in relation to that. So we're going to be getting deeper into budgeting later on in the course as we continue with our discussion. And if you're watching this on my study portal, you know that in your course you realize that you can see budgeting and budgetary control there in your syllabus outline. Now from there we're going to be looking at the regulatory role of public sector entities. The regulatory roles of public sector entities. We will look at the key requirements for the management of public finances in Ghana. We will consider some issues such as the role of responsibility of key officers in public financial management. Remember that when we are dealing with public sector accounting and finance, one of the major actors going to play a critical role is the Public Financial Management Act 2016, Act 921. This act is going to play a key role because most of the things that we're going to be discussing are going to be coming from this act. Now, we're going to be looking at the key roles of the Ministry of Finance and Economic Planning, the Controller Accountant General, the Auditor General. Sometimes we look at Parliament, we look at the role of the Administrator of the Common Fund, we will look at heads of departments, various roles that they play in ensuring that the public purse is manageable, or public resources are manageable in relation to that. Then one of the critical things that we'll be discussing in this session of the syllabus is the issue about sources of revenue. Sources of revenue. So we're going to be looking at revenue management if you want to. So what are the sources of revenue to the government? And we're going to be looking at it from the central government and also from the local government. And you know, these things are not really magical, but the reason why this is critical is that revenue management and expenditure, these together are what will cause you to be able to effectively prepare the financial statement later on, which is around section 4 or section 5 later on. So what are the sources of revenue to the government? We'll look at the tax revenues, the non-tax revenue, and then the tax revenue, we have the direct tax, the indirect tax, and then the non-tax revenue, we have the grants, we will have the loans, and all of those fines, fees, market tolls, all those things will be covered as part of the revenue for the central government. And you've got to know how where you're standing to be able to narrate how you're going to be staying, because if you're dealing with a ministry, a department, or an agency, the amounts that they receive, the budget allocation that they receive from the central government, from the consolidated fund, is their revenue, is part of their income. It will be part of what they use in paying for their expenses. And also, when the central government pays any expenses on their behalf, if you are dealing with them, then you need to find out that you must treat that transaction twice. One, you must treat it as an income, and at the same time as an expenditure. But if you are dealing with a consolidated fund, then any payment out of the consolidated fund will be part of our expenses. But you've got to also be careful here, because now we're going to be using the accrual basis. Okay, so if you are preparing the financial statement on the consolidated fund and we are using the accrual basis of accounting, then you have to know that it is not every expenditure from the consolidated fund that is going to be expensed in the statement of financial performance, right? Because we're going to be using the accrual basis. So some expenses will be capitalized and amortized over their economic useful life. If we acquire assets, we would not write it off in the statement of financial performance or the revenue and expenditure account. Rather, it will be capitalized and depreciated over its economic useful life. So you've got to be careful in relation to what basis of accounting we are using in the preparation of financial statement. And as you will see later on in the course, Ghana is implementing the IPSA, that is the International Public Sector Accounting Standards, which we will get into later on. And as Ghana is implementing the standard from now till 2023, it is estimated that by 2023 it is fully implemented. So everything is going to be based on the accrual basis, just like the private sector, how you prepare financial statement in the public sector, the same idea, the same terminology, the same idea, the same treatment, but sometimes different terminologies in relation to how you do the various presentations. So revenue, sources of revenue to the government, what are the internal controls that must be put in place to control revenue? All right, if government is not meeting its revenue, what what procedure does it put in place in order to meet its budgeted revenue. So all of those things are very critical because the sources of revenue is also critical to government's budget preparation. So we're going to be looking at all of these things when we go ahead. Then definitely we come to the expenditure. The expenditure, we have the statutory expenditure and then the non-statutory expenditure. Now, the statutory expenditure are the expenditure that do not require parliamentary approval. In other words, something like interest on loan. Okay, you've gone for the loan already. Once you've gone for the loan already, the interest that you're supposed to pay on the loan, you don't need any parliamentary approval. So that doesn't go to Parliament for debate. They don't debate on it to do no. It is paid straight up out of the consolidated fund because it is a statutory expenditure. Then some payment of gratuity, pensions. It's also a non-negotiable, non-debatable expenditure like payments that we have to pay to former state officials and other people, which is stipulated in the Constitution or stipulated in various acts. It is not debated on in relation to that. Then the District Assembly Common Fund. Per the Act, at least it must, a minimum of 5% of total national revenue must be paid to the how do we call it? To the local government for the local government management. That is the Metropolitan Municipal District Assembly. A minimum of 5%. Now, that means that the government of the day, the government in a year can decide that, okay, this year we will do 7.5%. This year we will do 10%. This year we will do 15% of the total national revenue. Now, when we talk about the total national revenue, we mean total national revenue, both from tax sources and then non-tax sources in relation to that. So that is also part of the expenditure. We will look at employees, emoluments, goods and services, that is the day-to-day running of the government activity or the agencies or the entities activity. We'll look at all various expenditure items that must be considered in relation to that. Then also we will look at the control mechanisms that the government or entities can put in place in order to control expenditure. We'll look at various methods like freezing of votes, across the board cards, issue of warrants, and a lot of other methods later on in the course, and find out how government uses all of these to control public expenditure. So that is the idea, that is what you have to understand about that section there. Now, so from there, we will look at the charts of accounts of government. We look at charts of accounts of government. Now, it feeds into these revenue and expenditure items. Now, the chart of accounts has to do with how the government characterizes, categorizes, and classifies transactions. Okay, I'm just using these words interchangeably. Okay, how transactions are categorized, classified in its account. So we have institutional expenditures, we will have program expenditures, we will have project expenditures. All of these are various categorization in the government chart of accounts that helps government to classify revenues, to classify expenditure in the consolidated fund. Remember, the consolidated fund is what we refer to as the Treasury's single account, the Treasury's main account, and that is part of the public fund of Ghana, because from the Act it is stated that the public fund of Ghana shall be the consolidated fund, the contingency fund, the Ghana Education Fund, the Petroleum Fund, the Road Fund, and all other funds are all part of the public fund of Ghana. But usually, all payment of government goes into the consolidated fund. Then from there, various transfers are made into the various sub-accounts of the government. Then, to conclude on this 15% section of the syllabus, we will look at the gifmis, that is the Ghana Integrated Financial Management Information System. That is the information system that helps government in public financial management. This is critical, this is important because of how it is and how it helps government in budgeting, how it helps government in revenue management, how it helps government in expenditure control, and how it helps government to, at the end of the day, manage manage the public resources effectively and efficiently in order to enhance public accountability and, most importantly, value for money in relation to that. So the 15% thematically, we're going to be looking at the budget, we're going to be looking at roles of key public officers, we're going to be looking at revenue management, expenditure management, charts of accounts, then also discuss the issues about the gifmis. So that is the first aspect of the syllabus, and that is 15%. It looks like it's bulky, right? But it's not that bulky. We will get it done and you will see it. Then we come to the B aspect of the syllabus, one of my personal favorite areas of the syllabus. That is also 15 marks, and that is the conceptual framework for general purpose reporting, for general purpose financial reporting in the public sector. Conceptual framework for general purpose financial reporting in the public sector. Now, this is also 15 marks, okay? 15 marks. Conceptual framework for general purpose financial reporting in the public sector. Now, this is similar to what you know already in financial reporting. Remember I told you how related these two subjects are now. It's almost the same idea. We're going to be looking at the objectives of financial statements. We'll look at the qualitative characteristics of financial statement. Remember, the objective of financial statement is to present the information in a way that is understandable to the users of financial information so that they can measure the accountability and value for money of various government activities and projects. Now, when we are preparing financial statements, when we are doing financial reporting in the public sector, there are a couple of qualities that must be met. And I know you know these already. Relevance, faithful representation, okay? Relevance, faithful representation. What else could we have there? Relevance, faithful representation, understandability, consistency, okay? These qualities are the same thing in the public sector as they are in the private sector organizations. Then we look at the characteristics of a reporting entity later on, then the elements of public sector financial statements. You know these elements already, okay? The assets, so we will define these things soon. Liabilities, equity or net assets, revenue, expenditure, okay? All of these are elements in the financial statement. But not only are we going to be looking at the elements of the financial statement, the syllabus requires also that we look at the recognition. So how do we recognize assets? How do we recognize liability? How do we recognize revenue? How do we recognize expenses? We're going to be dealing with all of those things as we proceed with our studies in relation to that. Then certainly we will look at the measurement of assets and liability presentation. So this would strictly be treated, some of these things will be treated under various IPSAs. For instance, if we are dealing deeper with assets, we're going to be looking at IPSAS 17, property, plant and equipment, which is actually the same as IAS 16, property, plant and equipment. When we are dealing with revenue, we're going to be looking at, I think, IPSAS 9, which is the same as IAS 18. When we are dealing with issues such as liabilities, we will look at other standards, bring the concepts together in relation to that. So for 15 marks, conceptual framework for general purpose financial reporting in the public sector, we're going to be just looking at and focusing on the financial statement from IPSAS 1 and various kinds of IPSAs in relation to how the various items will be recognized in the financial statements. So let's move on to C. C is the PFA, that is the public financial public expenditure and accountability framework. Public expenditure and accountability framework, and that is 10% per the syllabus grading, 10% per the syllabus grading. Now, under this place, we'll be looking at, like the name suggests, we'll be looking at various issues about how government's accountability enhanced, and we'll be focusing on the public expenditure framework, where it's a module where there are 7 pillars that government focuses on in analyzing its performance. We'll be looking at the scope of the PIFA framework. It was something that was adopted by the country some years ago. It helps governments in measuring the public financial management, how prudent the government has been. So we're going to be looking at the 7 pillars upon which the public financial management of an organization or of the government can be assessed. And we'll be dealing with that in relation to that. Then also we will consider value for money here. Value for money. So the PIFA has to do with assessing the efficiency and effectiveness of government's role in public financial management. Okay? They're assessing the effectiveness and efficiency of government roles in public financial management. So how efficient has government been over the years or during the period under consideration? That is what the PIFA is about. And the second leg about that is value for money. Value for money. You know, in the public sector, every spending at the end of the day, we need to look at the fact that are we achieving value for money, economy, efficiency, and effectiveness at the end of the day. So under PIFA, we're going to be dealing with that, going through with that, and having an idea on what it is that we need to do in relation to understanding that. So for 10% per the syllabus grading, these are the 2 major things that we have to, or we need to cover in relation to that. Now, note that right, in the old syllabus, there was accountability. It was accountability and value for money. But now it's only value for money that is here. Accountability in the public sector has been taken out in public sector under the new syllabus and is now in advanced audit and assurance in level 3. So when you get to level 3, you will do accountability in public sector. It was taken from the previous syllabus and then added to the level 3 public sector, level 3 or advanced audits and assurance. So that is the third aspect, PIFA for 10%. I said 30%. I wish it was 30%. Then let's go to the D aspect. Now the D aspect talks about accounting policies for both cash and accrual basis in public sector accounting. Accounting policies for both cash and accrual basis. This is going to be critical. Also 10% syllabus grading, having 10% there for our syllabus grading in relation to that. Now, when it comes to accounting policies, this is going to be critical. This goes back to the elements in the financial statement that I mentioned earlier on. So on a cash basis, how do we recognize assets? How do we recognize assets on the accrual basis? How do we recognize revenue on the cash basis and the accrual basis? So we will look at the various policies there that we need to look out for in relation to that. Among other things, we will look at the alternative choice of revenue recognition, asset recognition, liability recognition, and their measurement. So basically, this session is about the elements in the financial statement, and this goes ahead into preparation of the final account, because the accounting policy that the institution, that the entity adopts, if it is a cash basis, then there is a way the financial statement must be prepared. If it is an accrual basis, there is a way that the financial statement must also be prepared in relation to that. So that is the idea about accounting policies and accrual. Like I mentioned, that is the 4th session of the syllabus, 4 more to go, and that is 10% syllabus grading. So far, all the things I've spoken about, we've done 50% of the syllabus, 50% of the syllabus. So the first 4 gives us 50% and the second 4 gives us 50%. So I'll see you in the next video as we continue with our discussion of understanding the syllabus of public sector financial, what did I say? Public sector accounting, public sector accounting and finance. Okay, public sector accounting and finance.